want to talk real quickly about loan-to-value ratios and credit scores. Alfie, do you know what a loan-to-value ratio is?
No.
If you bought a home that cost $100,000 and you borrowed $80,000, that loan-to-value ratio would be 80% because $80,000 loan is 80% of a $100,000 purchase. Does that make sense?
Yes.
Okay. So it says debt-to-income ratios. Now, do you know what a debt-to-income ratio is?
No.
So if you had total outstanding debt of $2,500 a month, car payment, house payment, total outstanding debt of $2,500 a month, and your income was $5,000 a month, $2,500 is 50% of $5,000, so your debt-to-income ratio would be 50%.
Gotcha.
Make sense to you?
Yes.
Am I losing you or are you with me?
I'm here.
Okay, good. So debt-to-income ratios, according to CoreLogic, are on the decline, and loan-to-value ratios are on the rise. Average credit scores, they go on to say, for conventional conforming loans have ticked up as the third quarter of 2019. The average debt-to-income for a conventional conforming loan was 36% in the third quarter of 2019, down 1 point from a year earlier. So your average borrower has 36% of their income going out in monthly debt payments. That's interesting to know if you're out there and considering purchasing a home. Loan-to-value ratios, which we talked about, that 80,000 to 100,000 is 80%, have averaged 83% in the quarter, up 1 point from a year ago. And then debt-to-income ratios, Fannie Mae changed their DTI, debt-to-income limit, from 45 to 50% in July of 2017. From 2012 up to the announcement of this change, the share of conventional conforming loans with DTIs above 45%. So, Alfie, the share of the loans with people having debt-to-income ratios of over 45% ranged from 5 to 7%. It rose to a high of 21% in the fourth quarter of 2018. Now, the GSEs, that's Fannie Mae and Freddie Mac, those are the big government entities that buy loans from Bank of America, Wells Fargo, and other people, have loosened their loan-to-value standards, leading to a rise in loan-to-value ratios. Fewer than 2% of conventional conforming loans had loan-to-value ratios higher than 95% in 2014, Alfie, but by the second quarter of 2019, the share was 12%, which means 12% of borrowers out there put down less, listen to this, Alfie, than 5% down payment, which means if you don't have much down payment, there is some hope out there for you.